Okay. Good morning, everyone. Today's session on professional and ethical duty of a chartered accountant. Good morning. Welcome. Something quite different, something quite new, and something which was not there in the previous syllabus that was being followed. Uh, it's an interesting chapter. The only thing is there is no accounting entries or no journal entries to be passed here. No Ind AS references or no Ind AS troubles for you. No need of calculators. No need of any questions to be solved. And there is no need of breaking your head much. Okay, so what we are going to do is we will be running through the study content itself because that is the first reference that we are having, and we'll continue. So largely it is a case-based approach. What I am expecting to be followed by the institute. You will have questions drawn in the form of case studies, and you are going to answer those questions based on the ethics, the code of ethics, which is set for chartered accountants. Okay. So before I start, I would just like to begin. I never thought I would have a session that would begin with literature in financial reporting. So there is this famous poet, writer and philosopher. I don't know if you have heard of him, named Dante Alighieri from Italy. He is a famous writer, poet, philosopher. Okay. So he had made this quote, which I carry with myself of all the time. See, these poets come with a great deal of exaggeration, but this is a quote which I find of particular relevance. The darkest places in hell are reserved for those who maintain their neutrality in times of moral crisis. Probably this is one quote that we have to carry with ourselves throughout our life, whether we are chartered accountants or not. But I would request your attention to this, that whatever moral crisis you and I are going through, we should shun away from maintaining neutrality and side with what is ethical and what is correct. So that is the whole crux of this particular quote that I have treasured for my entire professional life. You cannot be expected to be neutral until the situation starts affecting you personally. Okay, so this is the bedrock of today's discussion. Okay, so there are many times when we come across ethical dilemmas, when we come across making a difficult choice between what is right and what is wrong. And the case studies that we are going to do today also emphasizes on this. So do not take this as a mere academic source. Go ahead and treat it as a more practical scenario. Okay. So with that brief background, I would like to start. We would be having the study material. This is going to be our base for discussions today. So, professional and ethical duty of a chartered accountant, my friends. Okay. Good morning, Viraj, Shankar, Shruti. Oh, good morning, Kaushiki. Good to see you. Good morning, Shailesh. Good morning. Good morning, whoever is watching. Okay. So why was this chapter not there earlier? We have a new code of ethics which came into force from 1st July 2020. So that is what we are going to go through. Now, this code of ethics also contains requirements for chartered accountants in practice as well as chartered accountants in service or employment. Okay. So what we are going to go through is primarily the service and employment part. Even if you see the case studies, it is more aligned to aspects of presentation of financial statements rather than auditing the presented financial statements. The audit portion or the facets that deal with your audit, the professional misconduct under the chartered accountant regulations, all of these are separately covered under your advanced auditing paper, which I am not going to go through. There is a brief reference to that in the study material, but it's mentioned that we are having certain other areas to cover, and some of these areas are covered separately under the auditing paper. Okay. So now, all of you would be aware we are governed by the Chartered Accountants Act, the Code of Ethics, the Council guidelines, as well as some self-regulatory measures. Okay. So in the Chartered Accountants Act, it is under this act that we obtain membership of the institute, whether it is Chartered Accountants in practice or in service. Also, why this became important is because we are having an increasing number of chartered accountants who are opting for employment, be it the industry, be it multinational accounting firms. Their first step is towards employment, and then they probably take a call of whether they would continue in employment or they would go ahead towards practice. So therefore, viewing the market trends, probably this chapter was thought to be of prime importance. It is a prime importance chapter. Okay. When we come to types of misconduct, we have professional and other misconduct. Then you have the disciplinary procedure under the Chartered Accountants Act, as well as you have the first and the second schedule to the Chartered Accountants Act, where you have the misconduct that is outlined. So this is the brief, what you can say. These are the pillars on which our professional ethics is currently standing. Okay, so these are the ones. Out of this, a couple of things you will definitely be covering under your audit paper. So today I am not going to take you through that. Okay. So now, what do I understand by ethics? What do I understand by ethics? Okay. It is a theory or a system of moral values. It is a theory or system of moral values. The principles of conduct governing an individual or the discipline dealing with what is good and bad, and with moral duty and obligation. So therefore, this is a basic definition of your ethics, a very generalistic definition, but it by and large clarifies what do you mean by ethics. So in what has happened is there is an adoption of the International Federation of Accountants, the IFAC Code of Ethics for Chartered Accountants. They came up with the Code of Ethics, and therefore, since we are a member of IFAC, we have adopted the Code of Ethics, which was improvised by IFAC. And this Code of Ethics is applicable from 1st July 2020. And currently, this is what we are going to go through. So now, what does this code of ethics contain? What does this code of ethics contain? It contains fundamental principles of ethics for chartered accountants, reflecting the recognition and responsibility of the profession chartered accountancy in public interest. So basically, this underlines the fact that we are all going to go in public interest. Our profession deals with public interest, whether you are an employee, whether you are a director, whether you are an auditor, whatever you are ultimately responsible for giving true and fair view, be it in the form of presentation, be it in the form of audit, be it in the form of a report. You are responsible for the public interest at large. And therefore, this code sets out the principles based on that. So that is the first item. These principles establish the standard of behavior expected of a chartered accountant. Fair enough. All right. Now, okay, so Arjun is asking, in all chapter end comparison of Ind AS and AS is given in the chart. Is it relevant for the exam? See, the AS, Ind AS comparisons are given because you people are coming from an accounting standard regime and you can understand the gaps or the differences where we are having from the Ind AS treatment. See, you are professional students. Okay, what is expected right now is a professional approach towards your answers. Obviously, you cannot expect the institute to ask a direct question. Can give the difference between AS 22 versus Ind AS 12. That is the accounting for income, of accounting for taxes or on income. You cannot expect a direct question like that. So therefore, those differences apparently do not seem to be important. मतलब वो याद करने के लिए नहीं है. But more importantly, what is expected of you is the correct treatment under your Ind AS regime. As far as your accounting standards are there, you are already expected to be an expert when you come to CA final because your intermediate completely deals with ASs. So the differences between AS and Ind AS, they are just compiled in one place, but you should ensure that by the time you complete studying an Ind AS, you yourself should be able to prepare that table and compare with your understanding of AS and Ind AS. So yes, from an examination perspective, it may not appear directly relevant, but it is expected that you should know the differences between AS and Ind AS. Okay, so that is the answer to your query. Good morning, Tanisha. Good morning, Suraj. Good morning. I think Mohammed is not there today. Yes, okay, all right. The code provides a conceptual framework. So here also we have a conceptual framework that chartered accountants are expected to apply in order to identify, evaluate, and address threats to compliance with the fundamental principles. Fair enough. The code sets out requirements and application material on various topics to help accountants apply the conceptual framework to these topics. All right. Now, this is important for us to know what is actually going to go under your auditing paper and what remains in your financial reporting paper. Principles laid down in Code of Ethics pertaining to audits, reviews, assurance engagement, including independent standards, established by the application of the conceptual framework to threats to independence in relation to these engagements. So basically, we are having what you can say audits, reviews, assurance engagements, threats to independence, independent standards. All these things are dealt with separately in detail in your advanced auditing, assurance, and professional ethics. So that part is not what we are covering. We are covering something more fundamental to that. We are covering something more basic to that. Okay. So now we all know who is a chartered accountant. A person who qualifies the examination, becomes a member on registration with the ICAI, and they will automatically be obligated to meet the professional and ethical responsibilities. Okay. If a member is found guilty of professional or other misconduct, then that member is liable to disciplinary action under section 21. The disciplinary proceedings hierarchy is all covered under your CA Act, which is a subject matter of your audit paper. We are not going to deal with that. Okay. What is professional or other misconduct? Well, professional misconduct is that misconduct which is defined in part 1, 2, and 3 of the first schedule, and part 1 and 2 of the second schedule. So this is what you are again covering in your audit paper. Other misconduct is what is defined in part 4 of the first schedule and part 3 of the second schedule. So what is the difference between the two is the professional misconduct basically deals with your what you can say misconduct arising in the course of your professional dealings, whether you are an employee. Suppose you are doing fraudulent financial reporting. You are taking certain entries which give a different picture altogether. You are making certain adjusting entries where you are window dressing the accounts. You are going to pick up certain, you are going to certify your financial statements as true and fair. You are going to give a true and fair opinion, though there is a misstatement and you are aware of that misstatement. So these are all your professional misconducts. You have not complied with the standards on auditing, and yet you certify that in the audit report. If you read the audit report, auditor's responsibilities, it says that we have complied with the standards on auditing issued by the Institute of Chartered Accountants of India. And if you have not complied with that, then it becomes a professional misconduct under this particular 3+2 schedules, whatever is there. Coming to other misconduct, this deals with misconduct apart from professional misconduct, misconduct in your personal life. So as chartered accountants, you are people with in whom the public has an interest. You are capable of influencing the society, and therefore you are expected to maintain standards of integrity even in your personal life, and therefore you have this other misconduct element also which is there. Okay, so these you can go through. This is just a chart that is prepared for your reference. Okay, how many clauses are there in part 1 schedule 1, how many clauses in part 2 schedule 1, all these details are there. You can just go through this. Okay, the clauses covered in part 1, 2 and 3 of second schedule. For detailed explanation, refer the chapter of professional ethics. So this is given to you. Okay, so this you can just go through. This is not what is important for us at this point of time. Okay, now for conduct of a member being an employee does not hold a certificate of practice. The council guideline states that a member who is an employee shall exercise due diligence and not be grossly negligent in the conduct of his duties. So this is something which you are having as a part of your council guidelines. The following part of the code, this is what is important. This is what is being dealt with in financial reporting. You are having compliance with the code, the fundamental principles and the conceptual framework, and chartered accountants in service. So this is what is important. This is what you and I are going to go through today. Limited applicability of the code coupled with your auditing paper, you are doing the code in totality. But as of now, it's very basic. It's basically covering my what you can say compliance with the code, the fundamental principles, the conceptual framework, as well as for chartered accountants in service. So these are the 2-3 things which we are going to go through today. So your code of ethics, this is the bare text of the code. We are going to cover the first part, that is applicable to all the persons, whether they are in service or whether they are in practice. This part is covered under your audit paper, and this part also is covered under your audit paper. This is what we are going to do. So these 2 things is what is applicable to us. The next 2, part 3 and parts 4A and 4B of the code are dealt with in your auditing paper separately. Okay, so with that background and this introduction, let us now commence with our chapter proper. That is, what do you mean by the code? What do you mean by the fundamental principles? And what is the conceptual framework? So this is what is important for us. Okay. Let me give a disclosure. You are not expected to by heart the code. Please don't by heart. As far as I have always taught you, I have tried not to make you by heart anything. I have told you to understand. Here also, understand the code. Understand the possible requirements of the code. Apply it to case studies. Okay, that is when you are going to get your scoring in this paper, in this particular topic. Merely by hearting the code, some of you may be very comfortable to by heart. Okay, it's not going to yield results, because what I foresee, depending on the questions which are there here, is it will be a practical approach. It is not going to be a theoretical paper. They will not ask you what are the fundamental principles applicable to chartered accountants. No, you are not meant for that. You are meant for something far higher than that. Okay. Yeah. Good morning, Mansha. Good morning, Uday. Yes, this is a new chapter. This is chapter number 16, module number 4. At least this is what I'm having. Okay. You can just have a look at it. Okay. See, a distinguishing mark of the accountancy profession is its acceptance of responsibility to act in the public interest. Somewhere when you qualify, it's not something which you are going to merely celebrate. It is something which puts a responsibility. You have received a certification. This certification gives you certain powers. Like if you are an auditor, you go ahead, you have access to books of accounts, etc., and you can give your opinion. If you are a preparer, you already have access to the system. You can pass your entries, you can ensure compliance with the standards and all of that. So somewhere there is a tacit, there is an implied understanding that you are acting in public interest. So therefore, a CA's responsibility is not exclusively to satisfy the needs of an individual client or an employing organization. No, you have a far greater responsibility. You have to adhere to, you have to meet, or you have to ensure that public interest is taken care of first, followed by the needs of an individual client or an employing organization. So the prime importance is acting in the public interest. If you find any disclosure, any treatment which is against public interest and they have tried to falsify it, as a chartered accountant, you are expected to bring it to notice to the appropriate authorities. So that is the first thing. Once you qualify today or tomorrow, you have to always remember. You have to always remember. Chartered accountants shall always comply with the code. This is the first thing. There may be circumstances where laws or regulations preclude an accountant from complying with the code. So therefore, what it is saying is there could be certain situations when laws and regulations prevent an accountant from complying with the code. Prevent an accountant from complying with the code. Sir, ऐसा कौन सा law हो गया? We are also, and this is also a law only, no? There is now, see, in your fraud reporting under section 143(12) of the Companies Act, you are required to report a fraud to the government immediately if it crosses a threshold of 1 crore rupees. Yes. So the law is requiring you to report this, and this reporting requirement is breaching one of the fundamental principles, that is confidentiality. So there is a conflict. On one side, you are saying you have to ensure confidentiality is maintained and you do not share the information that you have acquired in the course of your professional dealings, whether as an auditor or whether as an employee. But at the same time, the regulations are saying if there is a fraud, you have to report it to the government immediately. And therefore, there is a conflict. Law says report to outsiders, whereas the code of ethics says do not report to outsiders. So there is a conflict. So when you have such conflict scenarios, the law and regulations will override the code. The laws and regulations will override the code, and you have to follow that respective provision which is there in that particular law or regulation. And the other aspects of the code you will have to comply with, which is common sense. Okay. All right. So the principle of professional behavior requires a chartered accountant to comply with relevant laws and regulations. Why it is expected of you. Okay. They need to be aware of differences in local regulations from the provisions as set out in the code. Now, why do I have this local regulations used? Sir, this code is come from IFAC. IFAC is an umbrella body for all chartered accountants worldwide. So when they came out with the code, it is applicable to chartered accountants. It could be chartered accountants England, it could be chartered accountants Australia and New Zealand, it could be Pakistan, it could be India, it could be any country where chartered accountants are there, which are governed under the IFAC umbrella. So now the IFAC umbrella is not a particular statute. It does not comply to a particular statute. It is not reportable to a particular statute. And therefore, you are going to treat it as a guidelines subject to local laws and regulations. So this is what is going to be your, this is the reason why you have these local regulations and these words which are there in the code of ethics. Okay. Comply with the more stringent provisions unless prohibited by law or regulations. Okay. So now coming to the fundamental principles, these are 5 fundamental principles which we have to comply at all times. One is integrity, being straightforward and honest in all professional and business relationships. The next one is objectivity. That means you have to be impartial, you have to be neutral, you have to be free of bias in professional or business judgments without being affected by conflict of interest or undue influence, whatever be the case. So integrity is the first one, objectivity is the second one, professional competence and due care. This is expected from us. So you have to attain and maintain. So all of you are in the course of attaining professional knowledge and skills at the level required. You will attain a particular level, but once you join an organization in whatever capacity, you have to ensure that the client or your employing organization receives competent professional service. And for receiving competent professional service, which is based on current technical and professional standards and relevant legislations, you have to ensure that you maintain the professional knowledge. So merely qualifying your chartered accountancy is not adequate. You have to ensure that you maintain what you have acquired. You have to be updated. You have to attend workshops. You have to attend seminars. You have to be updated. You have to read. You have to ensure that you are updated in respect of all these aspects. And therefore, it's not only attaining, it is attaining as well as maintaining. And the next requirement is act diligently and in accordance with applicable technical and professional standards. Fair enough. So this is your professional competence and due care. The next one is confidentiality. The next one is confidentiality. Confidentiality is basically respect the confidentiality of information acquired as a result of professional and business relationships. Okay, so now we are having a query that, sir, in case of fraud, there is a non-confidentiality on the basis of information itself. Not necessary. You are an auditor, for example, or you are preparing the financial statements. Let me make it more interesting. You are preparing the financial statements and you are having the management coming to you and saying that we will alter a particular estimate because it gives a better picture of my profitability, or we will do some window dressing so that my balance sheet ratios exhibit a better picture before the banks. Now, this is confidential information. This is only privy between the management who is ordering you to do something which is fraudulent and you, the chartered accountant, who is an employee in that organization. Now, you have received this information. You have received this information based on a private conversation between you and the management. And therefore, ideally, the terms of the employment tell you that you have to respect confidentiality. You cannot disclose this outside. But once the financials are prepared with these particular riders which the management has put, you are now in a conflict. On one side, you have a law and regulations duty to report frauds. On the other hand, you have your confidentiality clause in your employment agreement, which says that you do not disclose anything without prior permission of the management. And the management will obviously not give the permission to disclose this private conversation with the Ministry of Corporate Affairs in the event of a fraud. So there it becomes a conflict. And therefore, the Act comes to your rescue and says that please disclose. Please disclose. You are at a liberty to disclose. And therefore, when you disclose, you are breaching confidentiality. But how is that breach happening? It is backed by a law or a regulation. So that is what this particular, this particular complying with the code aspect is what we had discussed earlier. Okay. And last one is professional behavior. Comply with relevant laws and regulations. Avoid any conduct that the chartered accountant knows or should know that might discredit the profession. Okay. So these are your 5 fundamental principles, and we have to follow this at all times. There is no relaxation to that. Okay. So there could be a case where complying with one fundamental principle conflicts with complying with one or more other fundamental principles. So if you comply with one, the other one gets non-compliant. So if you are exhibiting professional behavior, probably your confidentiality will end up getting affected. Or if you are complying with your integrity, confidentiality stands getting affected. So if that be the case, the accountant, so when they say accountant, it means a chartered accountant. So now accountant is synonymous with the CA. So please treat it like that. The accountant might consider consulting others within the firm or employing organization. Others means your immediately reporting manager, your colleagues, your team. You can connect with them to explain your problem. You are expected to consult with those charged with governance. So those charged with governance, these are the members who are providing strategic insights. So in the corporate hierarchy, you typically will be having your CEOs, chief executive officers, COOs, chief operating officers, CFOs, your chief financial officers, and you have the people below. These are all management. These are not those charged with governance. These are management because they are involved in day-to-day activities and in executing the strategies. They are involved in actually carrying out the groundwork. So these are management. Those charged with governance, I think you have studied your standards on auditing, SA 260, SA 265, which deals with those charged with governance, communication with TCWG and communication of deficiencies in internal control with those charged with governance. So there it is clearly mentioned that TCWG essentially means that it is a body that oversees the management. It is a body that oversees the management, that supervises the management, that provides strategic path for the company to grow, that is more concerned with strategy and those kind of issues and governance issues. So this is your TCWG. Below that is the management, below that is the staff who is actually performing the duties. And therefore, your TCWG is one step above. So, if there is a management perpetrated fraud which you are aware of and it is conflicting with the ethical duties, instead of discussing with the management, the code gives you the option to go to the TCWG also. If you are not comfortable there, you can go to the institute or you can go to the legal counsel. So it is four pillars which are there where you can consult. Okay, that's right. Even your CXO is there, chief technology officer is there. Okay, you are having a huge number of C's who are there formulating the performing the managerial functions. Okay, but what you have to understand is such consultation does not relieve the accountant from the responsibility to exercise professional judgment to resolve the conflict, or if necessary, and unless prohibited by law, disassociate from the matter creating the conflict. So what you have to understand is merely consulting these four is not adequate. Tomorrow what you can do is you may say, I sent an email to TCWG. Nobody reverted. So I do not know. That is not the situation. Okay. You have to ensure that merely consulting them, merely having a discussion with them, merely sending an email, getting a response will not prevent you or will not protect you if you fail to exercise your professional judgment to resolve the conflict. So along with all of them, you have to exercise your professional judgment to resolve the conflict, or if necessary, you disassociate from the matter creating the conflict. You come out of it and say, this is creating a conflict between my fundamental principles and therefore I do not want to be a part of this particular conflict. Okay. So that is what is the fundamental guidance which we have to follow at all points of time. All right. Now coming to the next one, we now discuss these details, these fundamental characteristics in detail. So one is your integrity. We all know integrity is basically straightforward and honest, being straightforward and honest in all professional and business relationships. A chartered accountant shall not knowingly be associated with reports, returns, communications where the accountant believes that the information contains a materially false or misleading statement, contains statements or information provided negligently, or omits or obscures required information where such omission or obscurity would be misleading. Disassociate will not mean resign from the company. Disassociate means you will no longer be part of that issue. You will no longer sign off. You will no longer give an opinion. You will no longer take any decision related to that conflict. See, resignation from the organization is always permitted, but that is not the only end result. Otherwise, you would be having a spate of resignations across companies. No, you should ensure that you try to resolve the crisis. I told you at the beginning of the session, I think you were not there. You should not remain neutral in times of moral crisis. That is the fundamental thing which we have to remember, professional or otherwise. You cannot remain neutral at the time of moral crisis. If you resign from the company, you know that something is wrong and you are moving out of the company, it means instead of resolving the issue, you are opting for the easy step of resigning and moving on. That is adopting a somewhat neutral position. You are saying, I don't know, so better let me move back. I know something is wrong here, but I am more concerned about personal safety rather than public interest. You are first a public interest person. You have your duty to the public, then to your profession, then to the client and your employing organization, and finally to yourself. So you come towards the end. You are not first in line to ensure that you meet your personal safety. Public interest is key, so therefore you have to ensure that you follow all these principles, all these guidelines, communicate with all the concerned persons, and even after that, if you feel that you are not able to resolve the conflict, disassociate from it. You can continue with the organization. But later on, we come to see that even if the situation persists, then you may consider resigning from the organization. Okay. All right. Objectivity means free of bias, being neutral in presenting the numbers, ensuring that certain indicators like profitability, ratios, etc., do not cloud the manner in which your financial information is presented. So that is the meaning of objectivity. So you have a particular question that is placed here. Okay, we just run through that question. Infostar is a listed company engaged in the provision of IT services in India. The directors are paid a bonus based on the profits achieved by the company. So when the directors are paid a bonus based on profits achieved by the company, then obviously you must understand that this creates a threat for misstatement. This is a risk for misstatement. When you are an auditor, when you do SA 315, understanding the entity, and SA 330, the responses to such assessed risks. Okay, you remember these audit standards, SA 300 series, you have SA 315, SA 320, SA 330. SA 315 is understanding the entity and assessing the risks that are there in the entity. SA 320, I think it deals with materiality, and SA 330 deals with the auditor's responses to the assessed risks in SA 315. And you have SA 315 and SA 330 once again coming in great deal in SA 240 that deals with the auditor's responsibility in the event of fraud in the financial statements. So applicability of SA 315 and SA 330 with the limited perspective of fraud is covered under SA 240. So in your SA 315, there is the requirement to assess the risks of material misstatement. There is the requirement to assess the risks of material misstatement. And when I talk about risk of material misstatement, this is a case where possible risk is there. A director will always want bonus. Who doesn't want? Even I want, even you will want, everybody will want a bonus. This bonus is linked to profit. You have bonuses linked to revenue. You have certain incentives linked to revenue. So therefore, see, these are all ways and means to ensure that the entity grows. This is a motivation given to the employees. As long as it is a motivation, no harm in that. But when the motivation ends up being an obsession, that I'm getting bonus, I'm getting benefited out of this, I'm getting more money, and therefore let us falsify it. Let us falsify it. Let us adopt certain strategies, certain techniques whereby the profitability goes up. For example, you have EBITDA. So your EBITDA percentage is the deciding criteria for your bonus. Then entities, then management will always try to show certain expenses below the EBITDA, even though they are above EBITDA. You can find ways and means to be creative in your accounting, but that is something which you have to be alert. So in this case, when you are having a bonus based on the profits, it becomes a potential area of misstatement. So this is what is given. Profit less than 1 crore, 0. 1 to 5 crores, 2% of NPAT. 5 to 10, 4% of NPAT. 10 to 20, 6%. 20 to 30, 8%. 30 and above, 10% of NPAT. The draft statement of P&L for the year ended 31st March currently shows a profit of 2 crores. Currently shows a profit of 2 crores. Fair enough. On 25th March 20x2, Infostar sold land located adjacent to the head office to a third party, Zest Limited, for a consideration of 40 crores. For a consideration of 40 crores. With an option to purchase the land back for 40 crores plus a premium of 6%. So today it will sell for 40 crores and I will buy it after 2 months at a premium of 6%. The amount received from the transaction eliminated the bank overdraft of Infostar on 31st March X2. On instructions of the CFO, who is a chartered accountant, the transaction was treated as a sale, including the profit arising on disposal in the statement of P&L for the year ending 31st March 20x2. Required, discuss the ethical and accounting implications of the above issues with respect to a chartered accountant in service, referring to the relevant Ind ASs wherever appropriate. Okay. So now my question to you is, what is happening? I have a draft profit and loss where there is a profit of 2 crores. Okay. In this 2 crores profit, I have a transaction. What is the transaction? I have sold land on 25th March, that is close to the end of the reporting period. And I have sold it with a condition to buy it back. I have sold it with a condition to buy it back at 6% premium after 2 months. Now the question is, what are the ethical issues? And remember that this is based on the instructions of a CFO who is a chartered accountant. So now a CFO who is a chartered accountant means this CFO is also governed by the code of ethics. That means he also has to meet the requirements of integrity, objectivity, professional care, whatever, those 5 things are there. So now my question to you is, What are the ethical and accounting implications of the above issues? What are the ethical and accounting implication of the above issues? What do you think? Is the treatment right or wrong? So when these type of questions come, you cannot just say the chartered accountant is wrong. It cannot be said as a sale, etc., etc. आप ऐसा नहीं बोल सकते. You are professionals. I consider you as professionals because it is just a formality to qualify an examination. So मेरे लिए you are all practically chartered only. But your answer must exhibit your professionalism. Your answer must exhibit that. So now, when I talk about this treatment, which particular Ind AS governs this? Which particular Ind AS governs this? You feel it is not a right transaction, but you have to be specific. You have to tell which particular Ind AS governs this particular situation. Do you recollect any Ind AS governing this particular situation? Yes. Yes. Do you recollect an Ind AS? Yes, that's right. Oh, Sumaya, that's right. Okay. So we are having Ind AS 115. I had only taught you long time back. This is a repurchase agreement. This is a repurchase agreement. I have sold and I have an option to buy back with 6% premium. And therefore, control is essentially not transferred. Control is essentially not transferred because ability to use and gain benefit from the land is limited. Okay. And therefore, you treat the transaction as a financing arrangement and you cannot treat it as a sale. So what the company sought to do was with one journal entry or with one transaction, it sought to meet two things. The first one is it sought to increase the profitability. The second one is it sought to eliminate the bank overdraft at 31st March, thereby presenting a favorable position of your banks, presenting a favorable position of your cash. And therefore, this treatment is not right. So you have to mention this in your solution. And then you have to mention what should be the correct treatment. First of all, identify the Ind AS and give the guidelines under that Ind AS. Give the provisions of that Ind AS. Thereafter, you should mention what the company should have done. It should not have derecognized the land because the risk and rewards of ownership are not transferred. The substance is a loan of 40 crores with 6% effectively reflecting interest payment. Okay. This is basically manipulating the financial statements to show an improved profit figure as well as a more favorable cash position. The sale must be reversed. The land should be reinstated at the carrying amount prior to the transaction. Okay, so this is the situation that is there. Now we come to ethical issues. You have to be specific. What is getting compromised. It appears that integrity of the CFO is compromised. Because he has accounted it as a sale and not as a loan. The effect of accounting it as a sale just before the year end is merely to improve profits and eliminate the bank overdraft, thereby making the cash position seem better than it actually is. This effectively amounts to window dressing, which is not honest as it does not present the actual performance and position of Infostar Limited. Okay. So we also had a similar issue with one of the government entities which we were auditing. So we saw that it was election year the governments were under pressure to show the public interest entities like your tourism, like your financing corporations under in profits. So what they had done was they had done a similar transaction. They had done a similar transaction whereby they had not done a transfer of land. They had not done a transfer of land at the end of the year. They had effected a transfer in the month of May, and we were doing the audit, we were signing off the audit in the month of June. So the sale of land was effected in the month of May. The minutes of the meeting till 31st March, which we referred, did not have any inclination that the land was getting sold. There was no firm contract, no firm agreement, and therefore there is actually no sale. There is actually no sale that was planned till 31st. The sale of land actually arose after 31st of March, and that gave rise to a huge profit. Now what had happened was something like this. This is on 31st March. On 31st March, the financial statements were bleeding. That means there was a loss. Here there is a huge profit. Here there is a huge profit. And we were on 30th of June. We were on 30th of June when we were signing off the audit. Now, what had happened was the finance head of this particular government entity said that we will prepare a document, we will backdate it, we will prepare a document, we will show an agreement to sale prior to 31st of March. We will show an agreement of sale prior to 31st of March. Remember, on 31st till 31st March, there was no inclination. This is a back thought. This is a back thought. So therefore, this huge profit they wanted to shift it to prior to 31st March. They said, anyways, the land is sold. Anyways, the land is sold. The problem is, if the land is sold, fine, we do the agreement to sell now on a backdated stamp paper, and thereafter we will show the profit now and eliminate the loss Obviously, we were not agreeable to this. We were not agreeable to this. It was a genuine sale. It is not this kind of treatment, but we were not agreeable to this. So they did this shifting and they presented profit, but we actually gave an adverse report because that is not a true and fair view of your financial statements. So we gave an adverse report on 31st March because it had a pervasive effect of converting a loss to a profit. And the following year also we had to give an adverse report because the sale which was effected in the current year was actually moved to the previous year. And therefore we ended up giving adverse reports for both the years because both the years we had an irregular treatment on account of this shifting of the profit arising on the sale of land. So you do have these kind of manipulations that finance heads resort to on account of pressure, Suraj, they have actually sold the land. They have actually sold the land. You know what the CFO will do? The CFO will present a stamp duty agreement. There is a stamp duty fee which is paid. There is a registration fee which is paid. You have actually registered the property in the name of the buyer, and then you actually buy back. So the CFO will have all the tools with him to say that, boss, I have actually sold the land. The buyer has paid the stamp duty. The buyer has done everything to ensure the ownership of the land is transferred. The ownership of the land is transferred as per the local regulations. Between 25th March to 25th May, this 2-month tenure, the land is not in the transferor entity's ownership. It is in the recipient entity's ownership. But at the time of sale, you are entering into a repurchase agreement. You are entering with a sale with a repurchase condition. And this sale with a repurchase condition is essentially giving you the right to buy it back within 2 months. So therefore, is it a true sale? Answer is no, it's not. It is sale with the condition to buy it back. It is sale with the condition to buy it back. And therefore, it's not a sale. See, why will somebody buy land? Will somebody buy land to sell it within 2 months? Why? That is very, very abnormal. That is extremely abnormal. And therefore, nobody will do that. Somebody invests in land, it will be for a long-term perspective, either for your construction or whatever XYZ reasons. But you are not going to buy land to sell it within 2 months. It is something which is highly inappropriate. And therefore, though you have the documentation, though the ownership is actually transferred, the key thing that you have to note is you are having a repurchase condition which is there in that contract. There is a repurchase condition which is there in that contract. Sir, condition nahi hai to? Sir, if the condition is not there, but the repurchase has actually happened. Yes, they did not put this condition in writing, but the repurchase has actually happened. You need to keep your eyes and ears alert because this is an abnormal transaction. Selling now and buying it back within 2 months at a 6% premium, you have to raise questions. You have to raise questions. You have all the right to raise the questions. And therefore, if you do not raise the questions, it means you have not exercised your professional competence. It means you have not displayed professional behavior. And therefore, there you are failing in your duties. Okay. So therefore, you are having this transaction which is not a sale, and therefore the chartered accountant CFO's integrity appears to be compromised. What he has done is window dressing to ensure that the financial statements do not present the actual performance and position. Okay. And next one is accountants must also act with objectivity. Therefore, the management must put interest of the company and the shareholders before their own interest. See, CFO is a management, is a member of the management. So therefore, management must put interest of the company and shareholders before theirs. This is a pressure to show profits and achieve a bonus in the self-interest of the directors. And therefore, there is a conflict of interest. Your answers must capture all these points. You cannot merely write the accounting issue and come out of it. Okay. You cannot say this is it. This is the contract. It is the sale and repurchase. Therefore, financials are misstated and the CFO is guilty of misconduct and end the answer. No, you have to give all these details. It is further necessary to comply with the principles of professional behavior which require compliance with relevant laws and regulations. In the instant case, accounting is not in conformity with Ind AS. The question will try to confuse you. The question will try to manipulate you. The question will try to force you in giving the wrong answer. But you must put all what you have learned in Ind AS and put all the application of that in these type of questions. And also, additionally, you have to give the comment in accordance with the code of ethics. Okay. The given facts do not make it clear whether CFO is aware of this or not. So you have to say the treatment is not as per Ind AS, but whether the CFO is aware or not, this is not known to us. That means you are doubting the CFO's professional behavior, the professional competence, whether he is updated with your Ind AS. You do not expect a CFO to be an expert in Ind AS like you and I are. But at least some amount of knowledge, some basic concepts the CFO should be having. Otherwise, is not fit for that role. A CFO of a company to whom Ind AS is applicable, who does not know Ind AS, is not fit to be the CFO of that particular entity. He should go and update himself with Ind AS. So here we are not told whether he is aware or not. But if he is aware and still applied the incorrect treatment, then he has deviated from professional behavior. If he is not aware, then he has not complied with professional competence. That means both the sides. Malum hai, then professional behavior is not complied. Malum nahi hai, he does not know Ind AS, then professional competence is a failure because knowledge and skills are not updated. In such a case, he is subject to professional misconduct under clause 1 part 2 of second schedule of the Chartered Accountants Act. Clause 1 part 2 of second schedule states that a member of the institute, whether in practice or not, shall be deemed to be guilty of professional misconduct if he contravenes any of the provisions of this act or the regulations made thereunder or any guidelines. And the guidelines of the council say that a chartered accountant who is a member and an employee shall exercise due diligence and not be grossly negligent in the conduct of his duties. So this is the way your answer should capture all the details. This is the way your answer should capture all the details. It is a case study approach. It is a case study approach. Definitely. But in this case, you are an employee. You are an employee. You are not the auditor, and therefore do not give reference to SAs, because you have to understand what are you answering. You are answering this question from whose perspective? See, we are chartered accountants. This is professional duties and ethics related to a chartered accountant. So in the question, you need to identify who is the chartered accountant. What is the role he is playing? Is he an employee? Is he an auditor? If he is an auditor, you can definitely give reference to standards on auditing. But in your FR paper, you will not get references to auditors. That is your audit paper. Here you are getting references to CFOs, management, staff, finance managers. All these people are the ones you are dealing with. So SAs will typically not have a role here. It will be generally Ind AS. It will be generally Ind AS and the principles Okay. Professional competence and due care. You can go through this. Essentially being aware, being updated. The requirements are changing at a rapid pace. Okay. Whether it is indirect tax laws, whether it is direct tax laws, whether it is financial reporting, whether it is Companies Act, whether it is strategic cost management and performance, all these things, your requirements are changing rapidly. And therefore, as a chartered accountant, you are expected to have a continuing awareness and an understanding of technical, professional, and business developments. Okay. Continuing professional development enables a chartered accountant to develop and maintain the capabilities to perform competently within the professional environment. You have so many workshops by the institute. You have so many training programs. You have so many professional development programs. Members are expected to attend that. Members are expected to attend that. Okay. What I have seen is members in practice are generally aware and they do attend such seminars. At least where I come from, members in practice are generally very diligent in attending this. But members in industry, you call it industry pressure, you call it work pressure. Members in industry typically are not so forward in attending these particular seminars or these particular programs. Okay. So therefore, they have to be more forthcoming. They have to be more forward looking to attend such particular seminars. Okay. All right. Diligence is what? Diligence is the responsibility to act in accordance with requirement of an assignment carefully, thoroughly, and on a timely basis. Okay. So that takes care of your professional competence. We have another case study. Okay. You have another case study. This whole chapter is very interesting because these case studies are like very interesting stories. Okay. Rustum Limited, company engaged in oil extraction. So when you see oil extraction, there could possibly be decommissioning and restoration liabilities. Okay. Has a present obligation to dismantle the oil rig installed by it at the end of the useful life of 10 years. Okay. So there is a particular obligation to dismantle the oil rig installed by it. That's right. I know this new age auditors is a very good workshop that is conducted by the institute. So I've seen that, and yeah, so you have to attend seminars for your members. Okay, it gives insights. Okay. Rustam cannot cancel this obligation or transfer it. Okay, so it is there binding on Rustam. Rustam intends to carry out the dismantling work itself and estimates the cost of the work to be 100 crores at the end of 10 years. Do not read the remaining question. Do not read the remaining question. There is an oil rig. Rustam has an oil rig and it is under an obligation to dismantle it. When should I recognize the provision for decommissioning and restoration? When should I recognize the provision for decommissioning and restoration, and in accordance with which standard? In accordance with which standard? You have studied both the standards, आप भाग नहीं सकते. Okay, you cannot escape the truth that you have studied. The institute has very thoughtfully placed this chapter at the end, and very thoughtfully the institute has kept the session after you have completed almost 70-75% of your syllabus. So now you tell me under which standard you have to do the accounting treatment. Come on, quick. You have studied both of them. You have studied both of them. Yes. Although it is there in the question. Yes, that is right. That is right. Ind AS 16 is right. Yadu, good morning. I did not see you responding earlier. Okay. Ind AS 16, that's right. And it is not just Ind AS. Suraj, you are not an intermediate student, my friend. AS 29 is not applicable to us. Grow up, my friend. It's not AS 29. It is Ind AS 37. It is Ind AS 37. Okay, so it is Ind AS 16. Read with Ind AS 37. So two standards are applicable. All of you gave the right answer. Ind AS 16. Read with Ind AS 37. Read with Ind AS 37. You have to understand the applicability of the standards, because these questions come on standards and standards alone, nothing else. Okay. So you have to work out all the knowledge of Ind ASs that you are having. Okay. All right. Let us come. The directors of Rustum are aware of the Ind AS 37. Read with Ind AS 16 requirements. Okay, very nice, very nice. However, they propose to expense the cost of dismantling the rig as and when incurred. That means they want to expense it at the end of 10 years only. They are saying we are not going to recognize the provision right now. We will recognize it after a tenure of 10 years. Okay. With no entries or disclosures in the latest financial statements. They argue that application of Ind AS involves judgment. Okay. And they also say that though prudence is mentioned in the conceptual framework, it is only one among the many ways of achieving faithful representation. Okay. Discuss whether the directors are acting unethically in the above instance, and what should be the practicing chartered accountant's course of action in this regard. They have asked a question from the perspective of a practicing chartered accountant. Okay, we can have a look at what the solution tells us. Okay, all right. Now, first of all, you are required to recognize the provision. You are required to recognize the provision in the first year, on the first day when the oil rig is put up, on the first day when the oil rig is installed, or when the oil rig is drilled and it is kept. You have this obligation right on the first day. And since you have an obligation right on the first day, that is the point of time you have to recognize the provision. They have not recognized the provision. It means that it does not appear to be an unintentional mistake, rather it is a contravention of Ind AS 16 and Ind AS 37 deliberately. Okay, they are justifying it by saying that Ind AS involves judgment and prudence is merely one of the ways of achieving faithful representation. See, Ind AS 37 and Ind AS 16 applicability has nothing to do with prudence in this case. The fact is you are under an obligation and I have to disclose that obligation. That's it. I have to disclose it. I have to account for it immediately. By not accounting it, by not giving a disclosure, you are misleading the users of financial statements. Okay. Let me make this a little more complicated. The directors say that we will not make a provision. We will book the expenses as and when they are incurred. The directors are willing to make a disclosure for this. They will give detailed disclosures in the financial statements. They will put all the notes. They will put the notes in Ind AS 16. They will put a note where Ind AS 37 provision is there. They will put a note in accounting policies. Every place they will put disclosure saying that this provision of 100 crores is not recognized because we believe this. Now I want you to tell me, the directors have not complied with the requirements of making a provision and they are making a disclosure. My question to you is, are the directors justified if they make a disclosure? I'm just deviating from this question. Are the directors justified if they make a disclosure? Answer this. If the directors agree to make a disclosure, are they justified? Tell me. Tanisha, Suraj, Sumaya, Yadu, Kaushiki, Uday, Arjun, Shruti, Shankar, Viraj, Mansha, tell me. The directors are willing to give a disclosure, but they are not willing to make a provision. That's right, Tanisha. Which Ind AS tells us that? That's absolutely right. Okay. So everybody is saying no, it's not right. A disclosure is not a substitute for non-compliance with Ind AS. And this is outlined in Ind AS 1. So you have to make a disclosure. You have to comply. If you have not complied, giving a disclosure will not take away that non-compliance. So you have to say that it is Ind AS 1 which tells us that a disclosure is not a substitute for non-compliance and they are bound to make the provision. Absolutely right, Mohammed. Okay, excellent. Okay. So what they have to say is, you explain the provision in brief. That means when we talk about making the provision, you have to capitalize it and then you have to amortize it and then you have to unwind the discount. So that you have to bring the provision to present value, capitalize it, unwind the discount goes to finance cost, provision what you have capitalized gets depreciated. Okay, so that is the first part. In the given case, it appears to be a deliberate intention to contravene Ind AS 16 and Ind AS 37. Okay. Though the directors can exercise strong or undue influence over the chartered accountant. Okay, so probably they're talking from the perspective of this chartered accountant. So they can exercise strong or undue influence. Particularly, this happens with SME firms. This happens with small and medium-sized firms where the client is generally in a stronger position because the client is the paymaster for these small firms. Okay. So they generally have a tendency to bulldoze the practicing chartered accountants. But in spite of that, the CA is bound to act with integrity and remain unbiased. Integrity, objectivity, recommending that these standards must be complied with. You can raise the matter before the non-executive directors, that is the TCWG. Maybe in the audit committee meeting it can be raised. It is essential to inform the TCWG about the necessary corrective measures in this case. By doing so, he will uphold the fundamental principle of professional behavior. All right, so he exhibits professional behavior, demonstrates compliance with laws and regulations, professional competence also he is exhibiting. If he does not communicate, professional behavior will be breached. Members should comply with relevant laws and regulations, avoiding any action that discredits the profession. Okay. And if he does not do so, subjected to professional misconduct under clauses 5, 6 and 7 of part 1, because here they have used the term practicing chartered accountant. Clause 5 states, they have given what is clause 5, clause 6 and clause 7. Okay. I do not envisage much of questions pertaining to practicing chartered accountants, but there is one question that has come that is just put in for your reference. Okay. All right. Coming next to the third principle, that is confidentiality. What is the meaning of confidentiality? Respect the confidentiality of information acquired as a result of professional and employment relationships. So if you have a client in the hospitality sector and you have another client in the hospitality sector, you cannot divulge secrets. You cannot divulge, say, the profitability margins. You cannot divulge, let us say, the manner in which a particular item is being treated. Okay. You cannot divulge a couple of things where what they call as trade secrets. Okay. It is what you have acquired in the course of your association with this particular entity. So you are bound to remain confidential. Accountant shall be alert to the possibility of inadvertent disclosures, including in a social environment. Suppose you attend a party by one of the clients, and you have the competitors also. So you are good friends with the competitors. So you should ensure that while socializing, you do not inadvertently make a disclosure. And more particularly to a close business associate or an immediate or a close family member. Okay. So we have had cases that were told to us. Okay. Very simple case. A very, very simple case. Okay. It may seem भाई इसमें क्या है, but let me tell you that you have to be alert to that extent. Okay, so what had happened was husband and wife were living separately. Okay, and they had initiated divorce proceedings. Okay, and the husband in this particular case was what you can say very guarded about his wealth. He had taken all the care that his assets are safeguarded. Okay. I'm not passing any judgment on whether the husband is right or the wife is right or whatever it is. Okay. I'm not concerned with that. Okay. And both husband and wife were filing their tax returns with a chartered accountant. Now, the chartered accountant is not aware that husband and wife are undergoing divorce proceedings. The chartered accountant is not aware. The CA is not even aware that they are having separation. They are living separately. Basically, he is a chartered accountant. वो बोलेगा, why should I ask these things? I should just stick to my job. So he just stuck to his job. He was filing their return for many years. And then one fine day, the wife comes to the chartered accountant and says that, please give me my husband's ITR. Okay, probably to check his wealth, to check his income, to check how much alimony she can claim. Okay, so now chartered accountant is not aware that the husband and wife are undergoing a divorce proceedings. Okay, Out of good faith, the poor chartered accountant took the print of the ITR, gave it to the wife, because see, our first reaction is husband wife mein kya privacy hai? What is the privacy between a husband and wife? Or suppose even a father and son, or a father and son, any relationship, okay? वाइफ ही तो है ना, तो हस्बैंड को ही जाके देगी. सो देयरफॉर he gave the ITR of the husband to the wife without taking prior consent of the husband. Good faith में. It is an ITR. It's not even signed financial statements which the auditor has signed off. It's mere ITR that is given. That's it. Now, this lady took this information and probably, I do not know, probably she may have filed an alimony based, a claim for alimony based on the data that went into the ITR. If if your income crosses 50 lakhs, you have to disclose all assets, liabilities, and you also have to anyways, your ITR contains the details of your income. So the wife got a very good picture of whatever the husband had as well as whatever the husband is earning. So she could make a good claim for the alimony. It is what I presume. The husband got, what you can say, the husband lost his temper on the chartered accountant. How did you give my ITR to my wife without my permission? That is, my friends, breaching of confidentiality. That is breaching of confidentiality. You are not supposed to breach confidentiality of one person to the other person, particularly close family members. See, they have mentioned this here, particularly to a close business associate or an immediate or a close family member. In fact, if you look at the sad part of it, I disclose the information very freely to close family members. I'm talking about general human. See, chartered accountants are also humans. Human tendencies are the same, whether he's a chartered accountant or engineer or doctor or XYZ, whatever profession, right? So therefore, our first reaction is, wife is asking, all right, we can give husband's ITR. Husband is asking, we can give wife's ITR. This case, the husband went to the disciplinary committee of ICAI saying that the chartered accountant has breached the confidentiality principle, and the disciplinary committee upheld the decision saying that the chartered accountant is guilty in breaching the principle of confidentiality, The wife did not come as a representative of the husband. It is a known fact. Let me be very clear, Sumaya. Yes, the wife is a representative of a husband is not written anywhere. Okay. When it comes to professional dealings, both of them are separate individuals, right? Unless there is a written communication, you are not expected to share the husband's ITR with the wife, or even vice versa, the wife's ITR with the husband. Okay. Therefore, unless there is something in writing, the wife should come in writing, or what the CA could have done is just make a phone call to the husband saying that your wife has come, she is asking for your ITR, I am giving it to her. A simple phone call would suffice. It did not work that way. Even if the wife comes and says, my husband needs his ITR, could you please give it to me? Do not. Okay. It's unfortunate. It's extremely unfortunate, but that is the truth of now. The member, poor fellow in this case, was held guilty of professional misconduct. The member was held guilty even though it was not an audit. It was something more fundamental to that. Okay. So this is the first point. Okay. Next one. Maintain confidentiality of information within the firm or employing organization. Do not go outside and say that this organization works like this, that, etc., etc. Not permitted. Okay. Maintain confidentiality of information disclosed by a prospective client or employing organization. Obviously, not to disclose confidential information acquired as a result of professional and employment relationships outside the firm or employing organization without proper and specific authority unless there is a legal obligation to do so. Unless there is a legal obligation to do so. So in the case of frauds and all, I told you that you have an obligation to disclose it to the central government, overriding the principle of confidentiality. And then you are having not to use confidential information acquired as a result of professional and employment relationships for the personal advantage of the accountant or for advantage of a third party. Fair enough. Do not use or disclose confidential information acquired as a result of professional or employment relationship after the relationship has ended. Suppose you did audit of a client for 10 years, then rotation came in place, so you are no longer the auditor. You do not disclose the information of those 10 years to some outsider. No. You left an organization as an employee after 5 years. The information of that employer organization will not be disclosed by you to the new organization or even to the public at large. Okay. You will not disclose. Take reasonable steps to ensure that the personnel under the accountant's control, that means your reporting team, and individuals from whom advice and assistance are obtained, these people respect the accountant's duty of confidentiality. These people respect the accountant's duty of confidentiality. Okay. So basically, confidentiality is a paramount principle, that should not be breached. That should not be breached when providing payroll services to clients, unless required by law or authorized by the client. So when you are providing payroll services, you cannot disclose X employee's salary to Y employee or vice versa. Okay, so that is one of the fundamental things you have to remember. CAs have a duty to uphold the confidentiality of payroll related information and ensure the security and protection of sensitive data of the organization. Okay, all right. Next one is confidentiality serves the public interest. Okay, this you can just go through it. When do you require disclosure? In the course of legal proceedings or disclosure to the appropriate public authorities of infringements of the law. So these are the cases. Disclosure is permitted by law, authorized by the client, or there is a professional duty to disclose to comply with requirements of peer review or quality review of the institute, inquiry or investigation by a professional or regulatory body. So suppose you are having a client on whom a search and seizure is going on and you as a chartered accountant are getting some summons. Then you have a duty bound responsibility to give the details to the department, and that point of time confidentiality will not become a barrier. Protect the professional interest in legal proceedings of a chartered accountant. Comply with technical and professional requirements, including the ethics requirements. Okay. So breaches of, so this you can just go through it. Okay. Hiding material facts which require disclosure, like reporting fraud, illegal activities, prevention of money laundering, etc., do not constitute confidentiality. They have an ethical duty to report fraudulent or manipulative activities that could impact the end users. Okay. So, chartered accountant continue to comply with the principle of confidentiality even after the end of the relationship. Even after the end of the relationship. Okay. So that takes care of the duty of confidentiality. That takes care of the duty of the confidentiality. Okay. Sir, sorry, Tanisha. Yeah, I read your question. See, clients will never tell everything to chartered accountants. Never. You have to understand that first. Okay. Whether it is an audit client, whether it is an ITR filing client, whether it is a GSTR filing client, whether it is a client on whom search and seizure proceedings are going on, summons are going on, assessment is going on, mere internal audit client. None of the clients will come to you on a plate and say, this is what is happening in my life. Please do the audit accordingly. Never. Ethics applies only to us. Ethics will not apply to the clients. That is the sad but unfortunate part of our profession. That is the sad but unfortunate part of our profession. Similarly, ethics applies only to employee chartered accountants. Ethics will never apply to management. Practically, I have seen this. Yes, ethics will never apply to the management who are non-professional. Okay, non-professional means do not hold professional qualifications. But ethics will apply to us as employees of entities because we are chartered accountants. Because we are chartered accountants. So your requirement that the husband should have informed the chartered accountant of the divorce proceedings, etc., etc. Ethically, he should have done. But nobody can tell that to the husband that he should have done it ethically because I am governed by CA regulations. Husband is not governed by CA regulations. Clients are never governed by CA regulations. So therefore, if there is a gross negligence, if there is a fraud, people come to auditors for this reason only. Because there is a statutory implication on the chartered accountant. There is no statutory implication on the management. There is no statutory implication on the management. Unfortunate but true. Unfortunate but true. That is why once you qualify and when you start your job and when you start your what you can say employment or practice, be very, very alert in your dealings. Be very alert. Do not expect a client to disclose everything. Do not expect a client to tell you everything. Do not expect the management to tell you everything. Even if the management gives instruction 1 today, it could give instruction 2 tomorrow, which is totally in opposite to instruction 1 which was given yesterday. Management has the duty to do anything and everything it wants. The chartered accountant is expected to navigate ethically. The chartered accountant is expected to navigate ethically. Okay. So therefore, the duty that a client should give is merely lip service. It does not really materialize in reality. Okay. It does not materialize in reality. Okay. All right. So that's right. Okay. So ethics applies to us. Don't expect the same ethics to apply to the counterparties. That is for the courts to decide. That is for the courts to decide. Okay. All right. Fine. So that takes care. Coming to the next one, professional behavior. Basically, you have to conduct yourself professionally. Okay. Be honest, truthful. Do not make exaggerated claims for the services offered by or the qualifications or experience of the accountant, or disparaging references or unsubstantiated comparison to the work of others. Filing ITRs is a good way of representing what you do. Giving 100% refunds of TDS, that is not the way you will advertise your services. Okay, do not make exaggerated claims. Do not give references or comparisons to others. That is not something you are permitted to do as an accountant. Okay, all right. Any indirect or direct measures to advertise any professional or other facts in violation of advertisement guidelines. This you guys would be knowing. Okay, so that takes care of all the 5 fundamental principles. So what are my 5 fundamental principles? This you have to remember. This you have to remember. Integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. At all points of time, we have to ensure that this is complied with. We have to ensure that this is complied with. Okay. Now, when I talk about the conceptual framework, what do I mean by the conceptual framework? A chartered accountant shall apply the conceptual framework to identify, evaluate, and address. That means first thing is I will identify, then I will evaluate, and then I will address what? Threats to non-compliance with the fundamental principles. Fundamental principles yani those 5 principles: integrity, objectivity, professional competence, confidentiality, and professional behavior. If there is a threat to any of these principles, the chartered accountant shall apply the framework to identify the threats to the compliance with fundamental principles, evaluate the threats identified, and address the threats by eliminating or reducing them to an acceptable level. Simple enough. Okay. Even in audit, you would have studied reducing the risks to an acceptably low level. Okay. When applying the conceptual framework, the chartered accountant shall exercise professional judgment and remain alert for new information and to changes in facts and circumstances. Okay. Professional judgment, we know what that is. I'll not be going through that in detail. And also they are saying use the reasonable and informed third party test. So what do I mean by reasonable and informed third party test? It is a consideration by the chartered accountant about whether same conclusions would likely be reached by another party. Again, a judgment, but a judgment which gives a standpoint. It says that if a chartered accountant comes to a particular conclusion, he is also required to ask himself whether a third party would come to the same conclusion. Such consideration is made from the perspective of a reasonable and informed third party who weighs all the relevant facts and circumstances that the accountant knows at the time the conclusions are made. He does not need to be an accountant, but would possess the relevant knowledge and experience to understand and evaluate appropriateness of the accountant's conclusions in an impartial manner. So basically, a third party is a non-accountant who is having access to all the information which forms the basis for the accountant's conclusions, and based on that information, based on those details, he comes to a conclusion. And that conclusion should be the same as that of the accountant for it to pass the third party test. Okay. So that is what is your third party test. All right. So now we have completed your, what you can say, in brief, your conceptual framework. And now we come to chartered accountants in service, which is the second part of this chapter. We are going to deal with a couple of brief things like conflict of interest, and apart from that we are having certain other things, preparation and presentation of information, etc., etc. We'll go through that, but first we take a break. Okay, first we take a break. Probably this is the first class where I am not even crossing 50 entries in the course of discussion. I hope you guys are finding it useful. Now we will be having lot of questions, lot of discussions that will happen. Okay. So I at least hope that you got a feel of what is the ethical framework and what is the ethical basis and also the conceptual framework. Okay. As of now, this is sufficient. After the break, we take a 10-minute break. We resume at 8:50. It is 8:40 almost. We resume at 8:50. Okay. And after that, yeah, we should be able to conclude this by 10:50. Okay. All right. Fine. Thank you. And a 10-minute break, please. Break. Welcome back, guys. So let's continue. All right. Coming next to chartered accountants in service. All right. First thing is he or she shall not allow a conflict of interest to compromise professional or business judgments. Okay. So what could be creating a conflict of interest? They have given certain examples like serving a management or governance position for two employing organizations, acquiring confidential information from one organization that might be used by the chartered accountant to the advantage or disadvantage of the other organization. So basically what you are doing is you are in governance positions, high positions. So there could be a chance that confidential data of one, you use it for the other. Now this typically organizations also take care by ensuring you do not go to competing industry companies or peers for a period of at least 1 year or 2 years after you leave the first organization. Okay. Undertaking professional activity for each of the two parties in a partnership where both parties are employing the accountant to assist them to dissolve the partnership. So when you are working in the capacity of an accountant for a partnership getting dissolved, you can be only with one of the partners. You cannot manage the affairs of all the partners because then it would be a conflict of interest. Okay. Preparing financial information for certain members of management of the accountant's employing organization who are seeking to undertake a management buyout. Okay. All right. Okay. Being responsible for selecting a vendor when an immediate family member of the accountant might benefit financially from the transaction. Serving in governance capacity in an employing organization that is approving certain investments where one of the investments will increase the value of portfolio of the accountant or an immediate family member. These are only examples. You don't have to remember it, okay? But it is just to give you an idea of what could be my conflicts of interest. What you have to identify as a chartered accountant is circumstances that might create a conflict of interest, and by virtue of conflict of interest, it could be a threat to compliance with the 5 fundamental principles, any of those 5 fundamental principles. So you have to look at the nature of relevant interest and relationships as well as the activity and implication for relevant parties. Okay. So now the threats that are created by conflict of interest, the threats created could be like in general, the more direct the connection between the professional activity and the matter at which the parties' interests conflict, the more likely the level of threat is not at an acceptable level. Okay, more direct the connection between the professional activity and the matter on which the parties' interest conflict. So suppose, for example, we are obtaining quotations for procurement of material. And so this is your professional activity, obtaining quotations. Now, one of the vendors is an immediate family member of the chartered accountant, So therefore, the professional activity is obtaining the quotations. The matter on which the parties' interest conflict is that the chartered accountant family member is also a vendor. So now there is a direct connection. The chartered accountant is asking for bids and the same chartered accountant's family member is bidding. So that connection is very high, and because the connection is very high, the level of threat is not at an acceptable level. The level of threat is not at an acceptable level. It is very high. So now if I have to eliminate this threat, how do I eliminate it? Well, you eliminate it by withdrawing from the decision-making process. You can say, my own family member is involved. Do not resign. The standard, the code of conduct does not require you to resign at every point of time. If there is an alternative, explore that first. Designation should be your last resort. Okay. So therefore, you can say, all right, I obtain the bids, but keep me away from decision making because my family member has also made a bid. And therefore, I do not want to be seen as favoring my family member. And hence, you are going to withdraw. You are going to withdraw from the decision making process. Examples of actions that might be safeguards to address threats include, what does it include? Restructuring or segregating certain responsibilities and duties, obtaining appropriate oversight, like for example, acting under the supervision of an executive or a non-executive director. Fair enough. You have the responsibility of collecting the bids. Deciding on the bids, you move out of that and allocate the duty to somebody else. So you have segregated the responsibilities, or you act under the supervision of an executive or a non-executive director. And generally, in the case of conflicts of interest, it is advisable that you disclose the nature of conflict and how the threats were created, how the threats that were created were addressed, including to the appropriate levels within the employing organization affected by the conflict, and obtain consent from the relevant parties for the chartered accountant to undertake the professional activities when safeguards are applied to address the threat. Fair enough. When addressing a conflict of interest, chartered accountant is encouraged to seek guidance from within the organization or from the institute or the legal counsel or another organization. Principle of confidentiality applies if you are taking it from third parties. Okay. So that takes care of conflict of interest. Okay. Just 1 second. Okay. We'll come to that example later after discussing the preparation and presentation of information. As chartered accountants, we have this task that is cut out for us, that we have to prepare and present reports to the management, to banks, to shareholders, etc., etc. So the chartered accountant shall prepare or present in accordance with a relevant reporting framework in a manner neither to mislead nor to influence contractual or regulatory outcomes inappropriately, exercise professional judgment to represent the facts accurately and completely, describe the true nature of business transactions, and classify and record information in a timely and proper manner. Not omit anything with the intention of rendering the information misleading or of influencing contractual or regulatory outcomes inappropriately. Okay. So that takes care of what do you mean by preparation and presentation of information. Okay. All right. Now you can just go through this for homework. It's just theoretical matters. I will not be addressing this much because it's just for you to understand. Okay. All right. Now let us come back to this question. Okay. Alap Limited's directors feel that the company needs a significant injection of capital in order to modernize plant and equipment, as the company has been promised firm orders if it can produce goods of international standards. Current lending policies of the banks require prospective borrowers to demonstrate strong projected cash flows coupled with a debt service coverage ratio exceeding 10. However, the current projected statement of cash flows does not satisfy the bank's criteria for lending. The directors have told the bank that the company is in an excellent financial position, fraudulently misleading the bank authorities. The financial results and cash flow will meet the criteria. That means they have already committed to the bank, and now they want to prepare the cash flow balance sheet, etc. based on that commitment. and the chartered accountant will submit a report to this effect shortly. So you are talking from the perspective of this chartered accountant who will prepare and present the report. The chartered accountant has recently joined Alap Limited and has openly stated that he cannot afford to lose his job because of financial commitment. So here this ends up giving a conflict. This ends up into a conflict. Okay. So therefore, he is now bound to this company and therefore he has to do what the management requests, though it could be misleading. Discuss the potential ethical conflicts which may arise in the above scenario. Is preparing and presenting financial data and the ethical principles which would guide how the chartered accountant should respond to the situation. Okay. So now, what is the conflict? There is a pressure to obtain finance, number one, and there is the personal circumstances. This is absolutely common in today's times. You have young professionals, okay, they get into debt traps, they buy houses, humongous houses for which they pay God knows what amounts, and then they go into a debt trap, okay. EMI, salary, EMI, salary. सैलरी आएगा EMI भरो, सैलरी आएगा EMI भरो. Then to match their salary, they end up into lifestyle expenses, cars, high schools, expensive houses, expensive clothing. Everything ends up into more and more debt trap. It ends up into creating financial commitments. You buy a phone on installment, you end up your entire life going in your monthly commitments, and therefore आप कितना भी कमा लो, you are always under the pressure to earn more. You are always under the pressure to earn more. Okay. So the CA is under pressure to provide the bank with a projected cash flow statement that will meet the bank's criteria, even though the actual projections do not meet it. Yes. The CA's financial circumstances means that he cannot lose his job. तो वो क्या करेगा? What management wants, he is going to do the same thing. That means that the ethical and professional standards are at odds with the pressures of his personal circumstances. So my simple observation is, if you have to be ethical, if you have to be ethical, you have to be grounded. You have to be grounded. Okay. Your requirements, your standard of living, you have to ensure that they are not at a luxurious high compared to what you are earning, because at some point or the other, you are going to catch up with it. And when you catch up with it, it creates these kind of conflicts of interest. Duty to shareholders, employees, and the bank. They have a duty to present fairly any information that the bank may rely on. So therefore, they are currently obtaining a loan for the purposes of modernizing the plant for better production, However, if the finance is obtained based on misleading information, it could be detrimental to the going concern status of the company. That's right. So there is a conflict between the short term, that is funding, versus the medium term interest, that is the need to modernize the company, and the long term interest, that is the company's reputation if the directors do not conform to the ethics. Okay. So by agreeing to give incorrect information, what are the things the chartered accountant is compromising? On integrity, on objectivity, as well as on professional competence. आमतौर पे out of the 5, these 3 are always compromised in your examination scenarios at least. Okay. And he is biased because he does not want to lose his job. So objectivity is compromised. Integrity, because he is submitting something false, knowing it to be false. And forecast do not specify that they have been prepared in line with Ind AS. Professional competence requires accountant to prepare the cash flow to the best of his judgment, which would not be the case if the projections were more favorable than they actually were. Appropriate action, there is an immediate ethical dilemma. Apply his moral and ethical judgment and not to indulge in creative accounting. Fair enough. put the interests of the company and professional ethics first and insist that the report to the bank be an honest reflection of the company's current financial position. Do not allow any undue influence from directors to override his professional judgment or integrity in the long-term interests of the company and its survival. So that takes care of your solution. Communicate to submit the projected cash flows to the bank, which reflects the current position, not the rosy picture. Knowingly providing incorrect information is considered as professional misconduct. To prevent such misconduct, a chartered accountant should not provide incorrect projected cash flows to the bank and color the financial position of the entity. And also he will end up into professional misconduct under clause 1 of part 2, whether in practice or not, contravenes if he fails to exercise due diligence or is grossly negligent in the discharge of his duties. So this is your last line, which is common for all your answers because that is a general clause that is there. Okay. So that is your solution to this particular question. Conflict of interest. Okay. So a chartered accountant will invariably yield to the management requests. Okay. Coming next, preparation we have seen. I told you to look at some of the theoretical aspects in that. Okay. Are we able to understand till now? Boys and girls? Any doubts? Any queries so far? No queries? No queries? Doubts? Issues? All good? Okay, fine. Coming to this, Sunshine Limited, a listed company in the cosmetics industry, has debt covenants attached to some of its borrowings, which are included in the financial statements. These covenants mandate the company to repay the debt in full if Sunshine Limited fails to maintain a liquidity ratio and operating margin above the specified limit. The directors, along with the CFO of a company who is a chartered accountant, so ethics are applicable to this fellow, okay, are considering entering into a fresh 5-year leasing arrangement, okay, but are concerned about the negative impact any potential lease obligations may have on the above mentioned covenants. Accordingly, the directors and CFO propose that the lease agreement be drafted in such a way that it is a series of 6 10-month leases rather than a single 5-year lease in order to utilize the short-term lease exemption available under Ind AS 116. This would then enable accounting for the leases in their legal form. The directors believe that this treatment will meet the requirements of the debt covenant, though such treatment may be contrary to the accounting standards. Discuss the ethical and accounting implications from the perspective of the CFO. Okay, so now tell me, a 5-year lease is a 60-month lease. A 60-month lease means you have to follow Ind AS 116. When you follow Ind AS 116, you recognize an ROU asset under the assets and you recognize a lease liability. And this lease liability gets, amortized over the tenure of the lease contract. Okay, over the tenure of the lease contract. Now my question to you is there any exemption under Ind AS 116? Yes. If the lease tenure is up to 12 months, you can treat it as a normal lease where you book the lease rentals as well as the which are charged off to the P&L. So in this case, a 60-month lease contract is broken down into 6 contracts of 10 months each. Now, why 6 contracts of 10 months? Because you want to override, you want to override the requirement in that particular standard. And because you want to override the requirement in that particular standard, you are following this. Now, why you want to override the requirement? Because there is a debt covenant which is attached. And one of the debt covenants say that you have to maintain a liquidity ratio. And because you have to maintain a liquidity ratio, you need to ensure that you are going to have debts at acceptable levels. By including Ind AS 116 leases, the debt levels start to go up. And therefore, you want to avoid that and show it as an operating lease. And therefore, you are making it as a lease exemption contract by entering into 6 contracts of 10 months each. So now the question is it right or is it wrong? Is it right or is it wrong? Is it right or is it wrong? It is incorrect. It is incorrect. You cannot modify a standard to suit your requirements. You have to follow the standard. So that is incorrect. So the CFO who does it would be violating the fundamental principles. Okay. So you can go through this solution. Okay. See, I'll not be reading the solutions in great detail because one is it consumes time. Secondly, we may end up not covering the remaining portions. Okay. So the treatment is contrary to Ind AS, breaches the fundamental principles of objectivity and integrity and professional behavior if the chartered accountants do not act. Okay. The proposals by Sunshine likely to mislead the stakeholders, which could discredit the profession by creating a lack of confidence within the entity. Okay. So you need to remind the directors of their ethical responsibilities. All right. So if the CFO fails, subject to professional misconduct under clause 1, part 2. Okay. So this is the standard. So that takes care of that particular question. Are we clear with this? Yes. Are we clear? Just give me a minute. Okay. Yeah. So I hope it's clear. Coming to the next one, acting with sufficient expertise. So we saw conflicts of interest, the first part. The second part, we saw preparation and presentation of financial reports and statements. The third one is acting with sufficient expertise. So a chartered accountant shall not intentionally mislead an employing organization as to the level of expertise or experience possessed. Okay. So currently our employment opportunities are quite what you can say skill based. So certain organizations may require chartered accountants with audit experience, with internal audit experience. specialists in indirect tax, specialists in direct tax, specialists in costing, specialists in controllership roles. So now when these are the expectations that an entity places on an employee, the employee also should be careful to give correct information to the employer or the prospective employer rather as to what is their skill set. It should not happen that you join by misstating the skill set that you possess. Okay. A self-interest threat to compliance with the principle of professional competence and due care might be created if a chartered accountant has insufficient time for performing or completing relevant duties, incomplete, restricted, or otherwise inadequate information for performing the duties, insufficient experience, training, and or education. It's not necessary for you to be a master in everything, but do not communicate as such. Inadequate resources for the performance of duties. Example of actions that might be safeguards could be obtain assistance or training from someone with the necessary expertise, ensuring that there is adequate time available for performing the relevant duties. If a threat to compliance cannot be addressed, determine whether to decline to perform the duties in question. If the accountant determines that declining is appropriate, the accountant shall communicate the reasons. Okay. So basically you need to disclose your sufficient expertise correctly. Okay. So coming to the next illustration, Agastya is a listed company engaged in the manufacturing of automotive spare parts. The company is preparing the financial statements for the year ended March X3. The directors are entitled to an incentive based on operating profit margin of the company. That means the EBIT margin. Okay. You have been appointed as a consultant to advise on the preparation of financial statements, and you notice the following issue. On 1st April X2, Agastya Limited's defined benefit pension scheme was amended to increase the pension entitlement from 12% to 18.5% of final salary. This amendment was made on account of salary cuts made due to the pandemic. The chartered accountant has shown such increase in the pension entitlement amounting to 85 crores under the head employee benefits forming part of the operating profits. So 12% to 18.5%, your rate at which the payout happens has increased, and because of this increase the impact has been 85 crore, and this 85 crore has been taken to the profit and loss account. The directors are unhappy with this presentation. They believe that the pension scheme is not integral to the operations of the company since it is paid post-retirement, and thus insist that such presentation would be misleading in computing operating profit or loss. Accordingly, the directors propose a change in accounting policy so that all such gains or losses on pension scheme would be recognized under other comprehensive income. The directors believe that this policy choice will make the financial statements more consistent, understandable, thereby justifying the same on grounds of fair presentation. The pension scheme of Agastya is currently in deficit. Discuss the ethical and accounting implications of the above issues, referring to the relevant Ind AS wherever appropriate from the perspective of the concern. Okay, so go through this question and tell me what is the mistake. What is the mistake? I have only taught you Ind AS 19, so therefore please tell me. Yes. Come on, tell me. Where should this 85 crore go? And what do we call this particular amount of 85 crores? If I am not wrong, we had done a similar question in Ind AS 19 as well. So you should be knowing this. That is right, Yadu. That is right. Okay. You recollect we had done a question of Ratna Limited. बच्चों को कुछ याद नहीं है. Students are not able to recollect. Do you recollect this question, my friends? Yes. Ratna Limited wishes to revise the percentage from 1% to 2.5%. And if you recollect, we had done the working 1,96,000 versus 4,92,000 was nothing but my past service cost. Was nothing but my past service cost. Are you able to correlate? Are you able to correlate? Yes. So in this case, the pension went from 12% to 18.5%. That means they have retrospectively modified the pension entitlement. And since they have retrospectively modified, it is a past service cost. It is a past service cost, and therefore it has to hit my operating profits. It cannot go in other comprehensive income. It cannot go in other comprehensive income. Okay. And therefore, the contention of the directors is incorrect. Number one. Second is, what are the ethical implications for the accountant? What are the ethical implications for the accountant? Okay. First of all, can you have a policy in deviation of a particular Ind AS? Answer is no. You cannot. Sir, can I depart? Yes, but only under extremely rare circumstances. This does not fall in that particular criteria. And therefore, current service, past service cost, net interest cost, all of them must go to the profit or loss. Ind AS 19 does not offer any alternative treatment as an accounting policy choice in terms of Ind AS 8. And therefore, directors' proposals cannot be justified on the grounds of fair presentation. So that is the first thing. That is the first thing. Okay. They wish to manipulate the aspects of the pension scheme because it is given to be in deficit. There is a net finance cost. They are purposely manipulating by recording them in equity instead of profit or loss. The increase of 85 crores. Okay. It would be non-compliant with Ind AS, though you are giving an explicit statement that these are in compliance with all the Ind ASs. Okay. As a meaningful, so this you can go through. When a chartered accountant discovers that a company's financial position has been compromised through misstatement, they have two options. They can either report the non-compliance or consider withdrawing from the engagement. Both the actions ensure integrity, transparency, and interest of stakeholders at large. In case the chartered accountant is influenced by the director's suggestions, he will be subject to professional misconduct under 5, 7, and 8. This is a consultant. This is not an employee. If it is an employee, it would be clause 1 as we have seen earlier. So this is putting just for your reference. Is it okay? Yes. Are we clear with this? Girls, Tanisha, Shruti, are you clear? Kaushiki, are you clear? Sumaya, are you clear? Yes. Shankar, Arjun, Yadu is clear. Mohammed, are you clear? Yes. Suraj, are you clear? Yes. Are you guys clear? Okay, fine. Next one is financial interests, compensation, and incentives linked to financial reporting and decision making. Okay, so you can go through this. It's nothing majorly deviating. Okay, a CA shall not manipulate information or use confidential information for personal gain or financial gain of others. Because they have financial interest, they could be having financial interest or interest of immediate or close family members that in turn might create threats to compliance with the fundamental principles. Financial interest include those arising from compensation or incentive arrangements linked to financial reporting and decision making. Okay, so examples of circumstances: there is a motive to manipulate price sensitive information to gain financially, holds an interest in the employing organization, and the value of that financial interest might be directly affected by the decisions made by the accountant, eligible for profit related bonus, holds bonus share rights or share options, participates in compensation arrangements which provide incentives to achieve targets. So all these cases could be the manner in which your what you can say financial interests conflicts exist. Okay, and then you can just go through this question for homework. Basically what they are saying is they want to sell off underutilized equipment and investments, and in place of that underutilized equipment and investments, they would planning to dispose of underutilized, and they want to show it as operating cash flows because their incentive is based on the operating cash flows. So therefore the proceeds on disposal, they want to show it as operating, which is not right, okay. So that is your illustration 6. You can go through that. Okay, all right. Next one is illustration 7. Okay, all right. See, illustration 7 is similar to that info star. These facts remain the same. It is further continued. The employee of InfoStar have historically been paid an individual performance paid based discretionary incentive for the last 15 years. Based on past trends and performance, the bonus amount for X1, X2 would be 3 crores. In view of the possibility of the directors not receiving the bonus on account of company's poor performance, InfoStar CFO has suggested that the discretionary incentive usually payable to the employees could be avoided in the current year, which would result in the company reporting the profits. As a part of its annual report, InfoStar reports employee satisfaction scores, staff attrition rates, gender equality, employee absenteeism rates, etc. as non-financial performance measures. The CFO has told the directors over mail that no stakeholder reads the non-financial information anyway, and thus his aforesaid suggestion of not paying the discretionary incentive would not impact the company greatly. Discuss the ethical and accounting implications of the above issues, referring to the relevant Ind AS wherever appropriate. Okay. So now go through this question, basically go through this issue and identify what is happening. Identify what is happening. Yes, tell me, what is exactly happening here? What is the nature of this bonus? What is the nature of the bonus that this CFO is talking about? Sir, it is a discretionary incentive. It is a discretionary incentive. Discretionary means, is it a statutory incentive? Answer is no, it's not a statutory incentive. Can the employees sue you for it? Answer is no. If I do not pay, the employees cannot sue me for it. But in terms of accounting or in terms of business, would you actually go ahead and stop this discretionary incentive? Would you go ahead and stop this discretionary incentive? Yes. Would you go ahead and stop this discretionary incentive? Come on, answer. As business, not on moral grounds, sir. Just not on moral grounds. You have been paying it for the last 15 years. Sir. You have been paying it for the last 15 years. That means you have successfully created an expectation in the minds of the employees. You have successfully created an expectation in the minds of employees that every year a performance based discretionary incentive is going to be paid. If you suddenly stop, do you think employees will sit quiet? Answer is no. They will demand the incentive. Is it a statutory incentive? Answer is no. It is a discretionary incentive. But what is the nature of that obligation? The nature of that obligation is a constructive obligation. It is a constructive obligation. You have paid that incentive for 15 years. The employees will say, why are you not paying it in the 16th year? You have created an expectation in their mind and there is no realistic alternative other than settling that liability. There is no realistic alternative other than settling that liability. And that is why we call it which obligation? We call it as a constructive obligation. And therefore, the CFO's statement that do not pay the discretionary dividend, this discretionary, do not pay the discretionary incentive. So therefore, this discretionary incentive has to be paid because it has given rise to a constructive obligation. The examiner wants to see these words, constructive obligation. And therefore, since it is a constructive obligation, you will have to make a provision in the financial statements. You cannot avoid it. You cannot avoid it. Is it okay? So therefore, when I talk about the ethical issues, clearly the CFO statement that the action will not negatively impact the company is misleading. The non-financial information is also increasingly becoming important. Number one, exercise due diligence and clearly consider financial and non-financial information. Unethical for a chartered accountant to guide the management on matters which may result into any kind of disadvantage. Further, a distinguishing mark of the accountancy profession is its acceptance of the responsibility to act in the public interest. A chartered accountant's responsibility is not exclusively to satisfy the needs of an individual client. Therefore, the code contains requirements and application material to enable chartered accountants to meet their responsibility to act in the public interest. Hence, upload the professional standards, act as per ethical principles by ensuring transparency as well as accuracy in the financial statements. Are we clear with this? Yes. Yes. Moral ground, negative consequences. Employee would be dissatisfied, negative impact on employee morale, reported as non-financial information. Are we clear with this? Yes. So it is a very short-term approach to garner the, it is a very short-term approach to garner the profits, but in the long run, it's detrimental to the company. Okay. Are we clear with this? Are we clear with this? Yes. Any doubt so far? Okay, fine. Inducements, including gifts and hospitality. This is basically pertaining to your gifts, hospitality, entertainment, political donations, appeals to friendship and loyalty, etc., etc. What is normally done in an organization, you can continue with that. Okay, you can continue to accept that. Like for example, on the occasion of Diwali, the employer gives sweets to all employees. Then you can accept that sweet. On the occasion of maybe the Dasara, for example, you may get certain gifts which is given to all employees. These hospitality or gifts are acceptable. But apart from this, if there is anything which is way outside the normal circumstances and you are getting gifts or hospitality or entertainment or political contributions, then that could meet the definition of inducement. That could meet the definition of inducement. Basically, the chartered accountant shall be alert for any inducement that he receives, she receives, or the spouse receives from the company, or the spouse pays for another company. So whatever be the inducements, the chartered accountant is at the center of it all. Okay. All right. And also, one of the factors, so this you can just go through immediate or close family members. Okay. That is what is basically going to impact the professional behavior of the chartered accountant. That is what will impact the bias. That is what will impact the objectivity of the chartered accountant in practice or in employment. So therefore, inducements and all, you will have to be a little alert. You will have to be a little alert. Is it okay? Yes. So that takes care. And responding to non-compliance with laws and regulations in case of employment with listed entities. Well, laws and regulations could be of two types. One is having a direct effect on the determination of material amounts and disclosures. This is something which we also have in essay 250, I suppose. Okay. 250 that deals with laws and regulations. Okay. Consideration of laws and regulations in an audit of financial statements. So similar language is used here. Okay. So one is laws which have a direct impact on financial statements like labor laws, tax laws, etc. One is that these other set is they do not have a direct effect on the determination of amounts and disclosures, but compliance with which might be fundamental to the operating aspects of the employing organization's business. That means I could be having other laws and regulations like the Factories Act, for example. It has no say as far as financial statements are concerned, but non-compliance with Factories Act could result into severe penalties, etc., which ultimately may end up threatening the going concern itself. Okay, so that is what is going to be your non-compliance. Now, when we talk about non-compliance, what is a chartered accountant expected to do? Comply with integrity and professional behavior, alert management, sir, or where appropriate, TCWG, to seek to enable them to rectify, remediate, or mitigate the consequences of the identified or suspected non-compliance, deter the non-compliance where it has not yet occurred, and to take such further action as appropriate in the public interest. Okay. Non-compliance with laws and regulations complies. This is the definition of non-compliance. Okay. Examples of laws and regulations with this section addresses include those that deal with fraud, corruption, bribery, money laundering, security markets, trading, yes, banking, data protection, etc., etc. You are having these sets. Is it okay? Yes. Responsibility. Auditor shall consider in determining how to respond to such non-compliance. Responsibility of senior chartered accountants like directors, officers, senior employees, etc. The acquisition, deployment, and control of the employee organization's human, financial, physical, and intangible resources. There is a greater expectation for such individuals to take whatever action is appropriate in the public interest to respond to non-compliance or suspected non-compliance than other chartered accountants within the employing organization, because senior chartered accountants' roles, position, and spheres of influence within the employing organizations. Okay. Addressing the matter, communicate with TCWG, comply with applicable laws and regulations, have the consequences remediated or mitigated, reduce the risk of reoccurrence, and seek to deter the commission of the non-compliance. Okay, so that takes care of non-compliance. Okay, determining whether further action is needed, assess the appropriateness of the response. The accountant suspects or has evidence of their involvement or intended involvement in any non-compliance. This is when the chartered accountant no longer has confidence in the integrity of superiors and those charged with governance. Contrary to legal or regulatory requirements, they have not reported or authorized the reporting of the matter to an appropriate authority within a reasonable period. Okay. So this you can go through, seeking advice internally with TCWG, with legal opinion or the institute's opinion. Okay. All right. So go through these things for homework. They are not carrying much of a significance. They are not carrying much of a significance. It's just for us to understand. Okay. All right. Now, This illustration, go through it for homework. It's very simple. Basically, a director's loan, they want to show it as cash and cash equivalents, which is incorrect. Okay. All right. Next, pressure to breach. Pressure to breach the, what you can say. This is our last part, and this concludes our discussion. So, a chartered accountant could be having a pressure to breach the fundamental principles. 5 fundamental principles. Okay. Any of that, there is a pressure to breach it. Chartered accountant shall not allow pressure from others to result in a breach of compliance with fundamental principles. Place pressure on others that the accountant knows or has reason to believe would result in other individuals breaching the fundamental principles. Fair enough. Okay. So threats could be implicit or explicit. It could be from the employing organization like a colleague or superior, external individual or organization such as vendor, customer or lender, internal or external targets and expectations. Examples of pressure: pressure from a family member bidding to act as a vendor to the chartered accountant's employing organization to select the family member over another prospective member. Okay. Discussing the circumstances creating the pressure and consulting with others about those circumstances might assist the chartered accountant to evaluate the level of threat. Okay. So, this is what we are having as far as pressure is there. Such discussion might include discussing matter with individual, discussing with accountant superior, escalating the matter within the employing organization. For example, with higher levels of management, auditors, TCWG. Disclose the matter in line with the employing organization's policies, including ethics and whistleblowing policies, using any established mechanism such as a confidential ethics hotline. Consulting with colleague, institute or legal counsel. Usual, nothing new in this. It's exactly what we have already studied so far. Okay. All right. Next. So this one, you go through this for homework. Okay. I have left you only 2 questions for homework and also the test your knowledge question. Okay. So all these are going to apply in the case of your professional ethics and duty chapter. Okay. You are supposed to ensure that you are aware of the 5 fundamental principles. The process, that is, you identify the threat, you evaluate the threat, and you address the threat. So your solution will contain, number 1, what is the possible threats that you are having, assessing the threats and giving an action plan to address those particular threats. Okay. So these are the 3 things your answer should exhibit. In addition to that, prior to coming to that stage, you should be able to elucidate the requirements of a particular Ind AS, the treatment that should have been there, the treatment which is there, and the treatment that is already given versus the treatment in the standard, and the rectification that is required to bring the treatment on par. All right. So this is something that you will have to ensure forms a part of your answers. And of course, the breaching of your 5 fundamental principles is something which we cannot overlook. Okay, it is fundamental principles. It will you will have to ensure that you remember those fundamental principles. Okay, go through this question for homework. It is same based on leases only. Okay, go through this question for homework. You will have to do some practice with respect to writing the answers to these questions. Okay, because you are not, if you do not have written practice, you will end up without you will end up giving a plain answer instead of a complete wholesome answer. like how we have seen in today's sessions. Okay, your answer should be wholesome, your answer should be complete. There is no need to keep it incomplete. Okay, professional skepticism is typically always there in your mind, but as an employee in an employer organization, the what you can say, as an employee in an organization, more than professional skepticism, what matters is looking at the manner in which the accounting is done, whether it reflects the actual business transaction or it discloses something else. Is that okay? Yes, that is what you will be more concerned with. Professional skepticism is something which is generally kept for the uh, auditors. It is generally kept for the auditors. Are we okay with this? Yes. Will you do this one question? Yes. Will you do this one question tomorrow? Yeah. Apart from that, nothing else is there to be covered in this chapter. It's almost all covered entirely. Anybody has any doubts, please ask. Anybody has any difficulty, please ask. Yeah. Doubts, difficulties, please let us know so that we can address. Go through all the illustrations to see how they have written the answers, how they have presented the answers. You are expected to present your answer in similar manner. Yes. Okay, Tanisha, Kaushiki, are you there? Shailesh, Suraj, Arjun, Mohammed. Are you guys there? Tanisha, Mansha, Shruti, Shankar. All clear? Okay then, fine. So with that, we conclude our session for today. I may not be seeing you in January. I'll be seeing you directly in February. Okay. So with that, we conclude. Thank you, everyone. And do revise this. It's a fresh chapter, but it's not very difficult. It's in fact quite simple. Most scoring, it will be scoring after you end up completing all the Ind ASs and once you are able to retain those Ind ASs. Okay. So please revise and be ready for this. Okay. With that, we close our chapter. Yes. Thanks everyone for the patient hearing. Thank you and have a good day. Have a good day, please. Yes. हाँ सेशन हो गया